How's it going, fellow traders? It's Magic Trader here, and this is the CFTC report for June 5th, 2018. Here's a snapshot of the positions being held by the institutions. And so let's take a look at gold and see what the institutions have been up to. Okay, so long positions are no longer aggressive, and short positions were aggressive a few weeks back, but since then have become very much more neutral than aggressive. All right, so they were aggressive here with shorts, causing price to drop, got to about here, and it's just been coasting sideways ever since, right? So if you take a look here on the monthly chart, you can see that it's testing that monthly 20 EMA and just sitting there. So lately we've seen some bullish action on the Euro US dollar, which would make us think that we are going to see more of a move to the upside here. But so far it really hasn't been doing. When you take a look at the daily chart, it's really just been stalling out. Yeah, it moved a little bit to the upside, but besides that it hasn't really been doing anything. So not able to trade this. The signs here are not clear. If you take a look at the coloration of the cells here, they're somewhat blue, which is neutral, meaning there is no strong bias here. So we should not be trading in any direction. So instead of trying to take apart the charts and try to figure out where the trades are, we move on to the next one. And our next one is oil. And lo and behold, what do we see here? For the last 1, 2, 3, 4, 5, 6, 7 weeks straight, the institutions have been taking profits on oil, long positions, all of this here. So was able to determine this was the area that we were going to get the drop, and that has so far played out very well. But long positions are still aggressive, as you can see, not as aggressive as they were back here. But take a look, a couple drops down, right? Long exposure means there is a lot more that they could possibly be taking off their long positions. So right now, you know, they're starting to take off those positions, but there's still a lot more to do, and they could definitely drop price all the way down here. Okay, now just based on market dynamics, price is going to want to at least come down here. Okay, it's possible that it doesn't. There's a daily trend line holding price up right now, but once that trend line breaks, there's really nothing to cause it to stop from falling all the way down to this weekly area of demand. So is that going to take place? I couldn't tell you, but considering that they have this many still long positions, if they wanted to cause a big reversal in price, this could very well be the turning point. Is there a chance that we get a bigger push? There is that chance. Okay, it does exist. That's why we got to really stay focused on the technicals, and in this week's report I have outlined to you very clearly the forces that are in play and what needs to happen for either a push higher or a breakdown lower. Okay, but what we can see is the institutions are definitely taking profits on their longs and a small increase in shorts as they're here. So this is really good signs for a bigger push to the downside. Okay, all of this is telling us this is coming. All right, so let's look to the next one. So we see on the US dollar, price was peaking up here right before the drop, and we see that institutions closed off a little bit of their longs, not a lot, but a little bit, and they also closed off their shorts. So really no telltale signs here of a larger drop to come. Okay, but it is still early. It was just at this peak. What do we see end up happening? A big drop. So it's most likely either shorts are being added to here, or longs are being closed out. It's one of those two. Okay, that's causing this drop. Next week's report will be able to determine exactly what that was. But regardless, we're getting that really nice drop and nothing to stop price from dropping all the way here. I believe on the daily chart an ascending trend line has already been broken, opening up the floodgates for this move to the downside. But still too early to get confirmation by looking at the positions of the institutions at this point. So let's move on to the next one. What do we see? We see the Aussie hitting weekly area of supply. Now, I said on last week's report, most likely the move we're going to get is a push to test that area of supply. That's exactly what played out. Now we've hit that supply. Now you see the supply coming into the market and pushing down. And as that's happening, okay, as this whole thing is setting up like that, the institutions are aggressive with their shorts. So, are they planning a bigger drop like this? It's very possible. Considering the fact that the euro is hitting weekly supply, okay, and we got the Aussie hitting weekly supply, these two currencies are very much aligned with each other, except for the fact that the positions are reversed, okay? Now remember this, on the Aussie, what do we see? We see that short positions are aggressive and long positions are cooled off as we're hitting supply. Okay. Later on, we're going to go to the euro and we're going to take a look at that, and you'll notice that it's a reverse scenario. And then we'll let's just shoot there right now. Right now. Okay. So you see here on the euro, longs are aggressive, shorts are cooled off as we are hitting supply. So what does that tell me? Okay. That tells me one thing. If indeed we get a move like this to the upside, then back here, if this weekly area does hold, and there's a very good chance that it does hold because we're dealing with a monthly demand imbalance and a weekly supply zone, okay, with the consolidation on the weekly chart. So this tells me that one of two things. The broader markets are telling me that the euro is most likely going to break up to the upside and continue moving higher. And if that does happen and all the other currency pairs move in the directions that their charts are suggesting they will move, then it's very possible that in the next few weeks the Aussie is going to be a lot weaker than the other pairs. Okay? It's either that, or if it rides through this area along with the other pairs and breaks up higher, then we are opening up the floodgates for a larger move like that to the upside. Okay, but right now, taking a look at the data, we can see that shorts are aggressive, even though, you know, here we were at 77, right? 77, then they increased their shorts, then they decreased their closing off their shorts, but still aggressive versus non-aggressive long position. So, are they just expecting a small push and then they're going to start adding their long positions? That's a possibility. But just taking a look at what we see here, it looks like the possibility of a weaker Aussie is what is about to play out here. Okay? And you know, you take a look here and you can see that the upward trend line's already been broken. Possible sign of more weakness to come. But that's what the data is suggesting right now. So let's go on to the US CAD, and we see that they increased longs from 48 to 51,000. They also increased shorts from 32 to 35,000, and that came as price was consolidating right here, right as it was touching the weekly descending trend line. So it touches the weekly descending trend line and they add longs, but they also add shorts. What ends up happening? A small move to the downside. So were they adding shorts to take advantage of that small move to the downside? Possibly. Maybe they're adding shorts to take an advantage of a move like this. With the coming US dollar weakness that I'm expecting to play out, I think this is the more likely scenario of a bigger retrace down like this, where they will most likely continue building up their long positions for a move like this. Okay, so I'm going to keep my eyes on this column. Okay, you can already see a telltale sign here. Okay, shorts are blue, meaning their short positions are very cooled off, and look at longs, white turning red. So they're slowly inching into aggressive territory, right? It used to be very cooled off, slowly inching into aggressive territory. So US dollar weakness could bring it down to this area and then build momentum for a push to the upside. And US Swiss franc, another one that is supporting a strong US dollar in the future. Longs very aggressive, shorts are cooled off, taking profits on shorts as price is dropping. Okay, so price comes up, they add short aggressively, and they're starting to close off those shorts. So I'm assuming that there's a possibility we get a bigger drop. I'd love to see price drop down here. Been waiting for that for quite some time, because once it does get down here, I'll be buying that all the way to the upside, even though this descending trend line on the monthly is holding price. You could see a lot of price action sitting above that descending trend line, which is indicative of a eventual break to the upside. So the sells, very green, bullish. Sentiment here is bullish. Just waiting for the right setup, either the drop to get in long, or wait for the US dollar to drop. If this maintains this 20 EMA, then look for a momentum shift, and then I'll get in long that way. Okay, let's go to the Euro US dollar. We see that they increased their longs from 230 to 239, but they increased their shorts very massively from 137 to 150. So why did they increase shorts by such a massive amount? And you see, a lot of people who analyze the data would look at this and say, ooh, they're adding massive amounts of short, so we should be getting in short. But what they're not realizing is this, okay? That data reflects this candle here, right? And it just removed a very serious area of demand where the institutions had filled in about 19,000 long positions. So they have to fill in so much supply that it takes out this area of, takes out this area of demand and causes a break and a push lower. So the increase from 137 to 150 is to break through all that demand, and the increase in longs facilitates this move to the upside. Okay, so now we're testing the weekly area of supply, and in the report just sent out to the members, I have specified what needs to happen for this area to be taken out, or if we are going to get a further move to the downside. So now we're at a very key point in price, because this week we have the ECB rate statement coming out, and since we are testing supply, it's very possible that we see a push to the downside, okay, because supply is coming into the market and this is a valid area of supply. Or we can see a takeout of that zone and a push upwards. To take out that zone will be difficult. I don't think it's going to happen that easily, so I think initial reaction is going to be downwards, but very good chance that this area gets taken out and we see a further move to the upside, just by looking at the other pairs and seeing what they're doing. And plus, they're still very aggressive with their long positions, right? So not as aggressive as here, where they first started taking profits. Okay, big drop since then, but still very aggressive. So do they want to get out of those longs down at these lows, or do they want to get out of those longs up here? They would rather get out of those longs up there, is what I'm seeing, so, and thinking. So so we'll see what happens with that. Okay, so we go to the pound. Here's a good sign that we're going to get that move to the upside. Look at that, longs increasing as price consolidates at the lows and starts to react to the upside. Okay, so increase in shorts, just like the euro, which causes price to go down, and then a big increase in longs, causing it to become even more aggressive than it has been. Overall, the picture is longs are aggressive, shorts are cooled off, so expecting a move like this so that they can get out of those longs, and then the drop will come. Okay, so let's take a look at US dollar, Japanese yen. So we see some big changes in the numbers, right? And that's indicative of changes in positions based on the coming contract expiration. So that's coming up in a few weeks. So I believe that the big change here from 71 to 55 and the big drop here in shorts is because of that. We are reacting to a descending trend line on the weekly. So as price dropped and then rallied back up, we see that longs are being closed off. Okay, so a drop from 71,000 to 55,000. So longs increase long positions, right? 61, 76, take profit on the longs, and then not expecting much of a drop maybe, and that's why closing off shorts. You know, we were aggressive with shorts just a couple weeks ago. That reaction drop from the weekly trend line, not so much now, but we're not seeing a big increase in longs for the move to the upside that I'm expecting. So what's going on there, right? So in the next few weeks we'll see how things play out with the positions, because we'll be able to better determine if all these changes in positions are in fact due to the contract expiry. But we'll have to wait and see. I'm waiting for a further move to the downside with the US dollar weakness, building up momentum to shift, and then I'll get into a long position, just like with the US Swiss franc. But on the US Swiss franc, we've got a very beautiful area of demand that price can drop into. Okay, Kiwi dollar. So this one is starting to move to the upside off the weekly area of demand. And what do we see? Increase in longs. Okay, same thing with the pound, right? Same thing with the euro. Increase in longs. The only thing is no increase in shorts, so slight decrease. More aggressive on longs than they are with shorts, and shorts are above average size because we just finished dropping. But look, longs right at average right now. Okay, even though we're at these lows after a big drop, so that signifies to me that very good likelihood that we see a big increase. Okay, we were bullish, turned to neutral, slowly entering into neutral bullish. Okay, momentum shifting. So looks very much like that is going to take place. So, okay, so this coming week we have a busy one. On Wednesday we have the interest rate released. Hold on for a second, let me double check that. Yes, on Wednesday we have the interest rate release for the US dollar. On Thursday we have the ECB interest rate release and a Bank of Japan, and also the I swear I saw the Swiss franc releasing rates. I believe the Swiss franc is releasing rates on Thursday as well. Swiss franc, the euro, and Bank of Japan, and the US dollar on Wednesday. So action-packed. This is going to be a very, very action-packed eventful week coming up, and just may be exactly what's required to see the big shift that I've been waiting to take place. Okay, boom, like that. That's what I'm waiting for, and hopefully we get that this week. If not, at least the data will start things in motion. Okay. Alright guys, that's it. That's your CFTC report for this weekend. I hope you're enjoying this weekend, and until next time, have yourself a good one. Take care.